All right, everyone, welcome back to another tip on the Docs Outside the Box tax series. We have tax planner, tax CPA, everything extraordinaire, Eric McGlothan. Welcome back. Eric, how you doing?
I'm doing good, Dr. Darko. Thanks for having me.
We're glad to have you here. We're actually on a roll. We're making some really good plans and really good path with what we're doing with trying to reduce taxes for those physicians and other professionals who are, starting side hustles or maybe going into locum tenens or independent contracting. We're basically trying to give them the best advice to keep as much money in their pockets and not give it to the IRS. So why don't we jump into our next tip? Let's talk about something that's called tax loss harvesting, something that I really got put up on game a couple of years ago. And this has to do with what you do with your stocks, maybe even possibly if you have crypto, what you do with that. So explain to us what tax loss harvesting is and what that does for your taxes.
So it's actually a pretty simple concept. So with stocks and cryptocurrencies and such, you know that if you can have gains and you can have losses on your portfolio. So tax loss harvesting is basically the ability to harvest or take those losses and actually use those losses to offset other gains in your portfolio. So people would say now may be a great time to harvest some losses because the market is just in the toilet. My portfolio, all of them are in the toilet. So I might make some analyze which investments may be like, look, I'm just going to go ahead and sell off, take those losses. And maybe there's some other gains as well that I have in my portfolio that, may need to realize some of those. So I sell off those stocks or investments as well. And the netting of the two minimizes the amount of capital gain, or potentially could even make it so that my net position is a net loss. And then I don't have any taxable income. And that's really the goal. So, if I
Mhm.
have, I don't know, maybe let's say I have an investment in stock A, and stock A has capital gains of $500. But then I have stock investment B, and there's losses there of maybe like $1,000. So I can sell off, get this loss of $1,000 to offset this gain of $500 and still have a net loss of $500. So I've effectively not paid any tax on this capital gain that I have.
Got you. Okay, so where this comes up is maybe not specifically your well, overall your income tax, but this is specifically the gains or the capital gains that you get from your stock investments. How do you decrease how much capital gains you're paying on your overall portfolio by determining, by what you just said, tax loss harvesting? How much have you
But because
lost? How much? Go ahead, please.
I'm sorry, I didn't mean to interrupt. It's all about timing. So one of the key things in general dealing with taxes you typically deal with the character of income, the timing of the income, and then like entity structures. All of those things can play into how income is taxed, right? So we've talked about the fact that stocks or portfolio income, cryptocurrencies, is taxed differently than active income. So active income, you have Social Security and Medicare and those kind of things that apply. With stocks, you either have if it's short term, meaning you've held it for 365 days or less, 365 days or less, it's taxed based on the ordinary income scale, 0 to 37%. But if it's long term, then it's taxed from 0 to 20%, right? So the stock income is already more tax favored than active income. But if I can then take some losses on some stocks and cryptos as well and offset that, then I'm further benefiting my position. To get to what you were talking about and how does this affect my overall tax picture, like my W-2 income or income from other sources, you can write off up to $3,000 in losses to offset, reduce that income. You can't take more than that. The law says only up to $3,000. So while tax harvesting may be great in terms of looking at your stock portfolio or your crypto portfolio, in terms of the whole tax picture, the effect is going to be minimal because there's a limit on how much you can claim on capital losses from your business.
So how does someone who is seeing what's going on in the market right now and they want to take those next steps, how do they take this advice and start to take is this a conversation they should be having next with their financial advisor and saying, hey, or if let's say they understand this themselves and they decide to do all those necessary things that they need to do, sell this possibly, or what have you, then are they taking this like sale and they're giving it to you, or they're waiting to the end of the year to let you know this is what I did? How does that next step work out?
So it's really a conversation that starts with the advisor to understand which positions, if you have an advisor, you should have an advisor.
Sure.
Said that the last time, but to advise on which positions you may want to move out of, because when you're selling positions, right, you're locking in losses. So you need to make sure this is a position you want to get out of. I I'm a person that tends to be a long-term investor, so I don't move in and out of investments a lot. But if your investor advisor says, "Hey, this is going to be a dud. This is not going to recover," maybe is what they tell you, then that might be an option to say, "Okay, you're going to realize this loss," and then there may be some other positions. You want to realize some gains. You don't want to just let all the gains stay in your portfolio. You want to realize that, take some of that cash. So they usually will help with that. Now, there are people who are just, retail investors. Like I use Robinhood, right? So I don't have an advisor I'm going to go to. I'm just going to, based upon my limited knowledge, maybe make some decisions. Now, what I will say, Dr. Darko, is where people are really exploiting this is in the crypto asset space. And the reason they're doing that is because there's what they call wash rules. Wash rules say that in the stock market, you can't sell out of a position and go in that exact same position within a 30-day period. Because if you do that, they're going to disallow the loss. With cryptocurrencies, there's no such rule because they're not classified the same way as stocks and bonds are. So people are doing these things because the market is so volatile. As you see, Bitcoin, Ethereum, it's
It's all
very
down. Yeah.
erratic. It's all, but it's all down right now. But there's very
Go
high
shoot back up.
swings. You go from 60 to 20. You've been at 3,000 at one time, then you go back up to 20. So people will take those opportunities where they can realize losses and take them and then go right back in the position. And then when the market gets really high, they'll sell again and offset the gains against the losses. So it's really a strategy. I think it has some complexities to it. You really have to think it through, but it is an opportunity if you're in that space and you really want to take some of those gains that are in your portfolio because you want to do something with that money, something else with that money.
Okay. All right. That makes sense. So listen, if someone wants to get in contact with you and says, "Hey, Eric, I want to further this conversation with you, maybe even work with you," how do they get in contact?
Eric McGlothan, LLC.com is my website. You can click on the appointment button. Be glad to talk to you, or call my office at 404-946-1855, 404-946-1855.
We love it. Hey guys, before we get out of here, we got to make sure you guys understand this is our disclaimer. This is for entertainment purposes only. Please get in touch and confer with your tax professional before moving forward with any of the information that you hear on here. Eric, thank you once again for this tip. We will catch you on the next one.
Thanks, Dr. Darko.